Hello everyone, here is a little emergency trading video. Sorry for everyone who's a fundamental follower of what I'm doing here, but I got hit up so much today. Today is the 2nd of January 2025 because Tesla deliveries came in below and the stock's not reacting too well on it. So I mentioned before in my big video, if Tesla is going to drop below 400, that it depends on deliveries and that I actually thought deliveries come in above 500,000. I said if that happens, I believe they stay in the channel above 410 or go back above 410. Now, of course, now deliveries came in significantly below. Not too bad, by the way, but they came in below at 495,000 roughly, and the stock is reacting badly. So what do we do with that information and how do we actually act on this? So here you see the stock. It's right now down 5%, which is pretty severe. And what does it all mean? So short term, no one knows what it means, but let me explain to you how I view the situation. I pointed out for quite a while now that I'm concerned about Q1. I'm concerned about Q1 because this run-up is pretty intense. It's a little overstretched short term, in my opinion. And the market likes to pull the rug on people. And I think in Q1, I was very concerned that we see a drop from 480, a pretty significant drop. And I always pointed out that this drop could be as bad as going back to here, right? To 340, 360. And people thought that's a little extreme. And all the bulls said like, no, it's going to go to 1,000. Of course, it's going to go to 1,000. The question is when. So my concern was, I want to watch out. I want to watch out in Q1 for a potential drop when the markets get wavery and Tesla drops, right? And then Tesla could drop severely. And I was in my mind preparing for 360. Now, the interesting thing is all of that happened already or is happening already. So the bad news is short term. If you look at this, I don't want to be too much of a technical analyst here. I'm not an expert in this, but there's a double top here, right? So it's run up, top, dropped, and then another attempt, lower top, and that's like bad. That's like an M, like a reverse W. That just means, we are trying to get over here, but twice rejected. So we are clearly on the way down. So short term, I'm not too sure where this ends up. I think this could easily drop to 340. But we also know that Tesla is in a bull run, and you need to be totally ignorant to not understand the fundamentals of Tesla and the future value of the stock and the enormous likelihood chance that Tesla goes to 1,000 this year. And I think on the most conservative level, everyone agrees it should be at 600 minimum end of the year for many, many reasons. And I don't see much deviation from that consensus among the smart analysts, the people who actually understand the company. So if everyone knows that, how far can it actually drop? It's like one of these games, right? As long as there's not market panic. So what I think is the bad news is I'm not sure we are done at 380 now that we have a negative catalyst like this. But I also think we have gone most of the way down that my worst case or my bear case for Q1 was. And it's just the start of Q1. So the way I put it is, I wouldn't place any short-term bets here. I would be a little cautious because this can go both directions, but we are clearly in a downtrend technically. And when I say technically, I mean week by week. So if you're a long-term investor, this has nothing to do with your strategy. Week by week tactical trading to generate alpha over a core position. I don't know exactly. I would be cautious. Of course, there's a reasonable chance this just bounces back. But if you look at the chart, I mean, this just looks like a downtrend and it looks like here's the floor. If that happens, I think the most likely, if I'm just completely cold-blooded about this, the most likely scenario is that this keeps dropping a little bit, and maybe to 360. So you have to be cautious with short-term short puts. And I think then, the further it drops and the further out time-wise we are in the year, the exponentially more likely it gets that you see some insane move up. because it's very simple, right? If you know this has to end up at 600, maybe even at 1,000 this year, the longer it doesn't end up there and the more it goes in the wrong direction, the more it goes up exponentially once the point has come. So in situations like that, I would be cautious very short term with short puts, and I would be even more cautious midterm on short calls. Right? Because if you think, "Ooh, this is safe, let's cover my losses here a little bit and sell short like a 410 call for next week or something, or end of the month a 460 call or 450 call, you can get completely destroyed." So I would be very cautious with that. So in phases like that, I would be, my favorite situations are if you see a run up, because I'm fundamentally very bullish on Tesla. So run ups are great. You just completely double down and ride the trend up, leveraged. Well, that's what I do. Don't listen to me, but that's how I think. Or if you're in a stable environment like here, and then basically selling these channels and generating some churn and getting premiums in. This situation here, I would be cautious because it can keep dropping. At any point, it can go up like crazy. So I think it's best to retreat to a core position and do very cautious, short put and call trading here. So if you have normally 100% target, so if you normally sell short, whatever, 10 calls and puts around your core position, at that point, I wouldn't do that. I would be cautious. So let's keep observing that. But my big takeaway is I think we actually dropped already very close to my bear case for Q1 without much reason. And I think that's good news. If we drop a little bit more, I think we can become very bullish, assuming, like short term, assuming the market doesn't, throws a tantrum. Maybe one thing. Let me see if I can pull that actually up. There was a very good tweet by CERN, Bashir. So he tweeted something about the deliveries that I think is very important to understand. I will conclude with that, where he actually talks about the fact here that Wall Street is reacting fundamentally wrong, which is not too surprising, right? Reacting fundamentally wrong because the deliveries are actually very good, and he explains why. And I totally share that sentiment. So CERN is basically pointing out that Tesla reported delivery numbers basically short 4,400 deliveries, below 5,000. And he basically argues they're falling short $31 million in profit because of that. I would argue maybe 100 million short because the expectations were more 510,000. But CERN points out, on the EV side, the deliveries show a shortfall of 31 million in profit. But at the same time, Tesla reported record energy deployment of 11.4 gigawatt hours, which is crazy because that was about 5.2 gigawatts higher than the average of the last 4 quarter deployments. And there was an expectation of they're not going to exceed 10. They're going to be below 10. And so now they're above 10. They're at 11.4. And then he points out that means $546 million in incremental gross profit. So this 100 million, gross profit miss on EVs is actually more than offset by 5 times or 500% with incremental additional gross profit from energy. So I think whoever reacts by selling Tesla shares here because of the deliveries got it completely wrong fundamentally. But we know fundamentals don't matter short term. But CERN is just totally right. So this is not just a delivery miss. It's actually on a profit level better than expected, significantly better than expected. But on an EV level, it's worse. On an energy level, it's better. Energy is growing rapidly, has higher gross margins. So this is actually good news, the whole thing. So market reacts wrong here. And that's just another little argument why the bullishness in Tesla, even in the core business, is not being affected at all by these deliveries. So we need to, that's why I'm always telling everyone, especially my friends who are, very fundamentally oriented and who look down on the charts and say technical is stupid. Well, it's stupid from a long-term perspective, of course, but it's not stupid from a short-term perspective. In order to win, we need to be great at three things: fundamental understanding of Tesla and all the catalysts and all the logics. Number two, technical analysis. We need to understand the charts. And number three, macro analysis. We need to understand the markets. I think there's a number four dimension, geopolitics. But these three are your bread and butter. And if we control that, we are in very good shape. So I hope that's helpful today. That's just a little tactical video here. And see you on Monday for more tactics. In between, we will talk about, tomorrow we'll talk about the updated financial model, and we will talk about Optimus. Okay, see you then.